Welcome, curious minds, to another deep dive. Today, we're really digging into the latest annual report from Qualcomm, a real giant in the tech world.
Absolutely.
Our mission, as always, is to cut through the noise, get past the headlines, and really pull out the key insights. We want to understand their business, their financials, what's driving their growth, and critically, where they might be headed.
And we want to help you get up to speed quickly on a pretty complex company.
Exactly.
And the source we're using today is their official 10K annual report. Filed with the SEC, covers the fiscal year ending September 29, 2024.
So this is the detailed stuff.
Oh, yeah. This is the blueprint, how they operate, their strategy, the financials. It's a deep look under the hood of a global tech leader.
Okay, so let's start unpacking Qualcomm's basic structure then.
Yeah.
How does this company actually, make money?
Well, at its core, their big vision is enabling intelligent computing everywhere. And they do that with foundational tech. Think 3G, 4G, 5G, wireless, obviously, but also high-performance, low-power computing, and a huge focus now on on-device AI.
And business-wise, they split things mainly in two directions, right?
That's right. Two primary reportable segments. First is QCT, Qualcomm CDMA Technologies.
Okay.
That's their semiconductor arm, the hardware. Designing and selling integrated circuits, system software, the stuff that goes into phones, cars, IoT devices.
So QCT revenue is mostly selling physical things.
Yeah.
Chips, equipment, related services.
Exactly. And then you've got QTL, Qualcomm Technology Licensing.
The other side of the coin.
Precisely. This is the intellectual property side. They own this massive portfolio of patents, especially essential wireless
The
patents.
foundational stuff that makes our phones connect.
You got it. So QTL grants licenses to use that IP. Its revenue comes primarily from those licensing fees. It's a different model from QCT.
And there's smaller bits too. QSI.
Yeah, QSI is Qualcomm Strategic Initiatives, basically their venture arm for strategic investments, and some other minor non-reportable stuff like QGOV. But QCT and QTL are the big engines.
What seems really interesting is how they're taking that mobile leadership and really pushing into new areas.
That's the key strategic pivot, absolutely. Moving beyond just mobile handsets. Look at automotive.
Yeah, tell me about that.
Their Snapdragon digital chassis platform, it's not just one thing. It's connectivity, digital cockpits, driver assistance systems, ADAS-ad.
So integrating the whole car's digital experience.
Right. And the potential scale here is, well, pretty staggering. Analysts predict 67% of new vehicles in 2030 will have built-in cellular connectivity.
67%.
Yeah, and almost half, 48%, are expected to feature 5G. Compare that to just 11% in 2024.
That's a massive ramp up.
Huge.
Yeah.
And similar story for ADAS and autonomous driving features, expected to jump from 20% of new vehicles having level 2 plus autonomy in 2024 to 39% in 2027. So automotive is a serious growth vector for them.
Okay, and the other big area you mentioned was IoT, the Internet of Things.
Right, and they break IoT down further. First, consumer IoT. Think PCs, they launched their Snapdragon X series platforms for PCs in 2024. Also tablets, wearables, voice and music devices, XR.
XR being extended reality, like VR and AR.
Exactly. And AI is huge here too. Projections suggest over half of PCs sold in 2027 will be AI capable, up from maybe 22% in 2024.
So AI PCs are becoming mainstream, fast.
Seems that way. Then there's edge networking. That's things like mobile broadband routers, advanced Wi-Fi access points, Wi-Fi 6, 6E, 7, connecting the edge.
Makes sense.
And finally, industrial IoT. This covers everything from handheld scanners in warehouses, retail tech, logistics tracking, smart utility grids, basically applying connectivity, computing, and that on-device AI to industrial settings.
It really sounds like AI and that next-gen wireless are woven into almost everything they're doing now.
They absolutely are. It underpins the whole strategy. They invest heavily in R&D. Their IP portfolio is vast: CDMA, OFDMA, LTE, 5G NR, Wi-Fi, Bluetooth. The list goes on.
And they have specific chips for this, right? I saw mentions of
Oh.
Orion, Adreno, Hexagon.
Yes, exactly. Those are key pieces of silicon. The Qualcomm Orion CPU, the Adreno GPU for graphics, and critically, the Hexagon NPU.
NPU, Neural Processing Unit.
Right. It's part of their Qualcomm AI engine, and it's specifically designed for efficient, high-performance AI tasks right on the device without needing the cloud constantly. Low power is key.
And they provide tools for developers, too.
Yeah, the Qualcomm AI Stack and AI Hub, they need developers to build apps that actually use this AI power. It's all driving towards this future where generative AI is just in your devices.
Like that stat you mentioned, 46% of smartphones sold in 2027 expected to be generative AI capable.
Yeah, up from maybe 19% in 2024. It's a big shift they're betting on.
Okay, so with all this technology expanding into new markets, how do they actually make all these chips? What's the supply chain look like?
That's a great question, and it's crucial. For the QCT side, the chip business, they primarily use a fabless model.
Meaning they design the chips but don't manufacture them themselves.
Mostly, yes. They relied on third-party foundries, the specialized factories that actually produce the silicon wafers. Think giants like TSMC, Taiwan Semiconductor, and Samsung.
Okay.
And these suppliers are heavily concentrated, mainly in the Asia-Pacific region. They also use third parties for a lot of the assembly and testing afterwards.
So that fabless approach gives them flexibility, lets them focus on R&D and design.
Right, it leverages the massive scale and expertise of those foundries, but it's worth noting they do have some of their own internal manufacturing.
Oh, really? For what?
For certain specific components, particularly RFFE modules, radio frequency, front-end stuff, and RF filters. They have front-end facilities in Germany and Singapore, and back-end assembly and test in China and Singapore.
So a bit of a hybrid model then. Mostly fabless, but some key in-house capabilities.
Exactly. It gives them some control over critical RF components while outsourcing the main logic chip production.
All right, let's pivot to the financials. We've talked strategy, technology. What did the numbers look like for fiscal year 2024? How's the financial health?
Okay, diving into the 10K numbers. Overall, pretty strong performance in FY24.
Good top-line growth.
Yeah, total revenues hit $38.96 billion. That's up nicely from $35.82 billion the year before in FY23.
And that flowed through to profit.
It did. Operating income saw a significant jump too. It grew to $10.07 billion compared to $7.79 billion in FY23.
So healthy growth on both revenue and operating profit. How did the segments break down, QCT and QTL?
Both grew. QCT revenues, the equipment and services, rose to $32.79 billion from $30.03 billion. And QTL, the licensing side, increased to $6.17 billion from $5.79 billion.
Okay, so solid growth across the board there. Anything else jump out from the income statement?
Well, one thing is the other expenses line. It dropped quite a bit from $862 million down to $179 million.
What drove that improvement?
Mainly lower restructuring charges compared to the previous year. They had about $107 million in restructuring costs in FY24 versus over $700 million in FY23. There was also a $75 million securities class action settlement in FY24 booked there.
Right. And I noticed investment and other income was up quite a bit too.
Yeah, that increased to $962 million from $349 million. The report says that was primarily due to earning higher interest rates on larger cash and marketable securities balances they held during the year.
Makes sense with rising rates.
Yeah.
So connecting this to the bigger picture, what does this mean for their cash position and how they treat shareholders?
Good question. Their liquidity looks very healthy. Cash equivalents, and marketable securities stood at $13.3 billion at the end of the fiscal year.
Up from the year before.
Yeah, up nearly $2 billion, so a strong cash cushion.
And cash flow from operations, how did that look?
Also strong. Net cash provided by operating activities increased to $12.2 billion in FY24, up from $11.3 billion in FY23.
So generating plenty of cash.
Definitely. Though there's a slight nuance there worth mentioning. The report flags that operating cash flow was negatively impacted by a tax rule change.
Oh, how so?
For U.S. federal tax, they now have to capitalize and then amortize their R&D spending over time, rather than deducting it immediately as incurred.
So it delays the tax deduction, meaning higher cash taxes paid up front, even if the overall tax burden doesn't change long term.
Exactly. That, plus they made some significant specific tax payments in FY24. A $1 billion payment they'd previously postponed, and a $414 million installment on a repatriation tax. So underlying cash generation was even stronger than the $12.2 billion figure might suggest because of those tax hits.
Got it. Okay, so they have strong cash flow.
Yeah.
How are they using it for shareholders? Dividends, buybacks?
Very actively. On the dividend front, they paid out $3.69 billion in fiscal 24. That works out to $3.30 per share.
An increase from the previous year.
Yep, up from $3.46 billion or $3.10 per share in fiscal 23. And they just announced another $9.85 per share quarterly dividend payable in December 2024. So steady dividend growth.
And share buybacks.
Also a big part of the story, they were working through a $10 billion repurchase program and had about $1 billion left on that at year-end.
And they've authorized more.
Yes, big news there. In November 2024, they announced a new $15 billion share repurchase authorization.
$15 billion. That's a significant commitment.
It really is. In fiscal 24 itself, they bought back 25 million shares for about $4.1 billion. That's an average price of around $161 per share, compared to buying back the same number of shares, 25 million, for about $3 billion the year before at a lower average price.
So consistently returning capital even as the share price has moved up.
Exactly. Strong signal of confidence and commitment to shareholder returns.
Okay, it sounds like a strong year financially and strategically. They're making big moves. But no company sails entirely smoothly. What are the main challenges or headwinds Qualcomm is facing?
That's right. The 10K is pretty clear about the risks, too. One major one is revenue concentration.
Meaning they rely heavily on a few big customers.
Yes. In fiscal 2024, Apple, Samsung, and Xiaomi each accounted for 10% or more of their total revenue. That creates dependence if one of those relationships changes significantly.
That could have a big impact. Makes sense. What else?
China concentration and geopolitical risk. This is a big one. China, including Hong Kong, was 46% of their revenue in FY24.
Nearly half their business.
Yeah, so any escalation in U.S.-China, trade tensions, export controls, national security concerns, that directly impacts their sales, their supply chain, even their licensing relationships in China.
And the reliance on Taiwan for manufacturing fits in here, too. Right?
Absolutely. Relying heavily on Taiwanese foundries like TSMC is called out as a specific geopolitical risk factor.
Okay, what other challenges?
Another is the risk of vertical integration by customers.
You mean customers like Apple or Samsung developing their own chips instead of buying Qualcomm's?
Exactly. We've seen some of that already. If major customers increasingly use their own in-house silicon, that directly eats into Qualcomm's QCT business. It's a constant competitive threat.
And finally, legal and regulatory issues. That always seems to follow Qualcomm around a bit.
It does. They face ongoing legal and regulatory challenges, particularly around their patent licensing practices. Think lawsuits, government investigations related to FRAND commitments.
FRAND being fair, reasonable, and non-discriminatory licensing terms.
Right. Questions about royalty rates, potential antitrust issues. These things are complex, costly, and an unfavorable outcome in a major case could significantly impact their QTL business model. It's a persistent risk factor.
So, given those challenges, customer concentration, China exposure, vertical integration, legal risks, how does their long-term strategy aim to tackle these and keep them ahead?
Well, it really comes back to those core pillars we discussed earlier. First, continuous innovation. They have to keep differentiating their chips, modems, RF, graphics, AI processors, making them better, faster, more power efficient, using cutting-edge manufacturing processes. That's table stakes.
Staying ahead technologically.
Absolutely. Second, offering cost-effective solutions across all tiers, not just premium phones, but mid-tier, low-tier globally. That broadens their market and reduces reliance on just high-end customers.
Makes sense.
Third, maintaining leadership in 5G and beyond. Keep inventing the next generation of wireless tech, building that IP portfolio, and licensing it broadly through QTL. That licensing income provides a buffer and fuels more R&D.
And fourth, the diversification piece.
Exactly. Accelerating adoption in automotive and IoT. This is key to addressing the concentration risks. By growing strongly in these other large markets, they become less dependent on the mobile handset cycle and specific large phone makers. It's about building multiple strong legs for the business to stand on.
So we've really covered a lot of ground today, taking a deep dive into Qualcomm's 10K.
We certainly have.
If we were to summarize the key takeaways for you, the listener, Qualcomm remains absolutely fundamental in mobile tech, but they're aggressively, and quite successfully it seems, expanding into automotive and IoT.
Driven by big investments in AI and next-gen wireless?
Right. Financially, fiscal 2024 looks strong, good revenue and profit growth, generating solid cash. And they're clearly committed to returning that cash to shareholders via dividends and significant buybacks.
But they're doing all this while navigating some pretty serious challenges: geopolitical tensions, customer concentration, competition, and ongoing legal scrutiny.
It's a complex balancing act.
It really is. And connecting this to the bigger picture, it does make you wonder, doesn't it? As technologies like powerful on-device AI become truly ubiquitous, spreading into everything, how will that change the balance between Qualcomm selling chips versus licensing its core IP?
Yeah, will QCT grow faster than QTL or vice versa?
Or will they find completely new ways to monetize? And looking further out, what other markets could that intelligent computing everywhere vision disrupt next? Where else could their technology fundamentally change an industry?
Definitely something to think about as we watch the future of technology unfold. Thank you for joining us for this deep dive.